Welcome to our live virtual fund formation practice area info and networking session. My name is Albert from Summer Associate Hub, and I'm proud to have you all here. As is the case with many transactional practices, fund formation is a common practice in big law, but not well understood by 1Ls, primarily because the 1L curriculum revolves around reading and analyzing cases, which is very litigation focused, and not so much around contract drafting and negotiation. So we put together this session to help you understand what fund formation practice means, what the day-to-day of fund formation practice actually includes, and how to position yourself for a career in this area. You can make better decisions, decide if this is an area for you, and you could stand out in the recruiting process too by understanding the terminology and speaking the language. This is the last episode, last but certainly not least, last episode of our fantastic Summer Associate Hub Live virtual practice area series, where students learn about what it's like to actually work in big law in different practice areas and prepare for the recruiting process. If you missed the prior episodes, don't worry. They are all recorded and in our video library and practice area overviews at summerassociatehub.com. So definitely take advantage of that and watch all those other episodes. It's super helpful, and I'm sure this one will be as well. We have a great panel of attorneys. You'll enjoy it, so let's get into it soon. So the agenda is as follows. We'll have a panel discussion featuring our attorneys from Frey, Proskauer, and Winston and Strawn. That will be about 30 to 40 minutes, including Q&A. After the panel discussion, each firm will host a separate Zoom room for those who want to join, ask questions, or listen to hear more about the firm. In the meantime, please use the Q&A function to ask any questions for the panel generally. Those are all anonymous, so don't worry. And before we wrap up the panel discussion, we'll also have some fun prize raffles for firm swag, sponsored by each firm. Firm swag is the best part of the recruiting process, and hopefully you win. We've had some pretty awesome prizes being thrown out to the public over the last few weeks. You have to be here to win. So we'll be calling your name out live on the air. Don't go anywhere. We'll send a link in the chat to so you could sign up for the raffle. Before we jump in, quick intro. What is Summer Associate Hub? Summer Associate Hub is a free content and resource hub for law students embarking on the 1L and 2L recruiting process. I'm a former law student and big law associate. We know here from our own experience how hard it is as a 1L to understand what it's actually like to work at a law firm. Our platform, summerassociatehub.com, has blog posts, podcast episodes, short video tutorials and exercises, interviews with attorneys, and other content to help you learn about practice areas and prepare for the recruiting process. We also host live virtual programs. You know about that because you're watching one right now, where students can easily learn from and network with law firm attorneys. We do plan, although this series is over, we do plan to have some more virtual programs after final exams to help you with the recruiting process, as you'll probably be more in the thick of it at that time in May and June. So stay tuned in our newsletter for more information on that. All right, so let's get started. Instead of me introducing everyone, I'll let everyone introduce themselves. So I guess, Rami, let's start with you. Introduce yourself and your practice, and briefly why you chose to be a fund formation attorney.
Yep. Thanks, Albert. I'm Rami Turayhi. I'm a partner in the asset management group at Frey. And now on the alternative investment side, we have two different sides. That's one of the two. Why I chose to be a fund formation attorney? It's a good question. I showed up the first day, my first year as a law associate at my first firm, and it was the first assignment I was given. I did try out more or less every transactional practice over the first 2 years, and I just gravitated towards the kind of the value proposition, the people orientedness of investment funds, and just like the people that were in the group. And so it ended up being the place where I stuck the past 15 years.
Fantastic. Meg, on to you. Introduce yourself, your practice, and briefly why you chose to be a fund formation attorney.
Yes, I'm Meg Frey. I am the one of the co-chairs of the private funds practice at Winston and Strawn. And I, similar to Rami, did a little bit of everything as a junior associate. I did private equity buyout transactions. I did financing on the lender side, financing on the borrower side. I did an IPO. I went to the printer. I don't even think we do that anymore. But anyway, tried a little bit of everything and gravitated toward fund formation as well. Started working on a lot of real estate funds actually back then. And I liked that you could, really look at the deal and work out what the parties wanted and negotiate, and having some freedom from, from some of the securities laws and things that are restrictive in other areas. So I liked the flexibility in the negotiation that came with the fund formation practice.
Great. Ryan, on to you. Tell us more about you and your practice and briefly why you chose to be a fund formation attorney.
Sure. Thanks for having me. I'm Ryan Carpenter. I'm a partner in the private funds group at Proskauer. I've been here my entire career and in the private funds group for that whole time. I became a funds lawyer. I guess the abbreviated version is I was a paralegal right out of undergrad in a litigation group at another big law firm that's not represented here today, but it almost cured me of wanting to be a lawyer. I went in-house at a hedge fund, and I worked at a hedge fund for 3 years, and then in a private equity group for a couple of years after that. And I was the client for a bit. And what I learned while I was in that role was that when you're in the room with the business folks that are coming up with these great ideas, step 2 or 3 is usually pick up the phone and call the lawyers and ask them how you get it done. And I thought, well, that's a lot different than being a litigator. You know, maybe law school is worthwhile. And I wanted to be on the other end of those phone calls. So I decided to go back to school, and I've been at Proskauer since then.
Great. So I guess Ryan, let's stick with you. So I guess in more detail, what are the typical matters that you'd work on when assisting private equity funds with internal governance and ongoing operations and management? I know that's one subset of private funds practice. So tell us more about that.
Yeah, so it's a very broad group of matters, but I think ultimately when you think about how private fund managers how they handle governance that's really how they run their businesses day to day, which touches on a number of things. One is how the economics get split between the people who own that business. Another is how do the people that run that business, how do they control that? What are the internal arrangements as between the partners or the managing directors at that client? What's their internal arrangement as between them, each other? And how does that evolve over time? And that can turn into a lot of things for our clients. It can turn into, as they evolve, they admit new partners. They might sell part of their business to somebody else. And it can be complicated. And I know we're not going down into the weeds too deep today, but when we think about our clients, right, there's sort of 2 sides to the business. There's an operating side that is what we call their management company, and that's sort of that's the business that has employees and has a lease and people show up to every day. My computer just went to sleep. Sorry. Can you still see me? I'm good. All right. Sorry.
You're good.
And that's the business that has it's an ongoing value there, and that makes big decisions. And then each fund is individually controlled by a different entity, and so that we have to have a conversation every time they raise a new fund. How are you going to split the profits that relate to this fund, and how are you going to control decisions as it relates to managing this fund? So it's an ongoing conversation. Is really the short answer that changes on a case-by-case basis, and it's not really like a set it and forget it thing for most of our clients, right? And the other things we do that include, succession planning as the next generation will sort of move up and move on. How does that transition happen, both within the organization, and then how does that happen facing investors? Because investors care when management of a firm is moving on. Who's going to take over? Who's running my money today? Who's going to manage my money tomorrow? I think the other aspect of operations, which can also be really broad, includes things like compliance with regulation, which is a huge topic in and of itself. But our clients are subject to all kinds of rules under SEC regulation and congressional acts like the Advisors Act, and that touches them on their day-to-day basis. So we're sort of constantly fielding calls. How do we comply with this? Is there an issue with doing something one way or the other? Are we complying with our agreements? And some of our smaller clients, it just becomes, we're like external general counsel. They call us really for everything. So it's sort of, it depends, but it's it's different every day.
One of the benefits I think you hear often from fund formation attorneys is the different type of work you could do within that practice. So I guess, Meg, on to you. What are some of the matters you would work on when representing funds in typical fund formation matters? And I might have skipped ahead a little bit, but I guess an overview of private equity, funds generally would also, I think, be helpful. So curious to hear about that from you.
Sure, absolutely. Just as a quick introduction, what we're talking about here are private equity funds, and just to differentiate that from a hedge fund or a mutual fund, a private equity fund is privately offered, so you can't buy the interests on the stock exchange. It needs to be through a private placement with sophisticated investors, but it also makes investments in privately held companies. So it's privately offered, but also investing in privately held companies. Usually, 10 to 15, depending on the strategy, will go into a fund. A hedge fund, on the other hand, is also privately offered. However, it invests in public companies. Because of that, there's liquidity available. So investors can come in and out on a regular basis. It could be monthly or quarterly. They can redeem on a monthly or quarterly basis because the assets that they're invested in are liquid. There's a value. And then going one step further to a mutual fund, that is a publicly offered company that also invests in publicly offered companies. So here you have a lot more liquidity, even daily, hourly, for a mutual fund, because it's a public company that's also publicly listed. So back to private equity funds, because they're, these assets can be valued and easily liquidated. When investors come in, they come in for a long time. So the typical fund term is 10 years, but to be fair, many of them go on for 10 to 15 years. So the documents that we work on when we're forming a fund are highly negotiated because this is a long-term partnership that people are coming into. So when we are doing fund formation, Ryan was talking about the management company and all the issues that go along with that. We're representing the management company, private equity firm, fund sponsor, all the same things. And you hear all those terms thrown around in forming the fund. And that requires, a lot of upfront documentation. So there's a private placement memorandum. So that's explaining what you're doing, describing the team. We work on that with the business. It talks about their investments strategy, what they've done in the past, track record, and we work on the details of that. We also, there's a partnership agreement. So that's the document that governs all the terms. And as I mentioned, because this is a long-term investment, those are highly negotiated. And investors are looking to get profit as companies are sold over time. And that's over a long period of time. So most of what we do is really negotiating those main key documents and negotiating with institutional investors, high net worth individuals, pension plans that are looking to invest in this market. And they often have sophisticated counsel, and it's highly negotiated. But what's great for junior associates is that there's so many different aspects of the fund formation practice for you to get involved in, and like at Winston and Strawn, and like a lot of the other firms, including Proskauer and Frey, they'll do other things too, investing in private equity funds or selling interests in private equity funds, forming funds. So there's a lot of variety in the type of work that we can do in this space, and a lot of opportunities for junior associates to get involved.
Fantastic. So we heard from Ryan about the ongoing kind of operations and management of a fund, and Meg gave us an overview of fund formation and an overview of the private equity fund formation landscape generally. So Rami, tell us more about the matters you'd work on in the day-to-day when counseling funds on securities law, such as registration, compliance, and those types of matters.
Yeah, we typically, so for those who don't know much about funds practice, it used to be a one-stop shop. You come in and one person kind of does everything for you from beginning to end. As funds have gotten more sophisticated, as the regulatory environment has gotten a lot more complicated, most firms now with asset management or funds groups tend to split some of the day-to-day function related to regulatory or fund formation or hedge versus private equity into distinct groups, because they're really so much you have to know now in order to do this job. You know, and depending on how a court case in the Fifth Circuit goes, it could end up being even more complicated this year. I don't know if you guys are in law school are following the Eugene Scalia saga down in Texas. But on the regulatory side, I mean, this part took, it's funny, as an associate, it took me years to figure out the morass, and no one ever really explained to us in like a really thoughtful way, like exactly how all of it plays out. But essentially, you're operating within an environment when you're pooling capital and selling it to investors, not publicly. So as other panelists stated, this is being done on a private basis. You have to abide by a few different rules. The primary ones we deal with are the Advisors Act of 1940, the Investment Company Act of 1940, and the Securities Act of 1933. And in our world, we do a lot of placement agent stuff, so also the Securities and Exchange Act 1934. All of these interplay in various ways, and we could spend like 3 hours talking about all of that. But the basic gist of it is the SEC wants to protect investors. And so it sets all these rules about what a sponsor of a private equity fund has to do in terms of disclosure, has to do in terms of ensuring that the investors are sophisticated enough to make an investment, and also what they have to provide on an ongoing basis. I mean, there's a whole set of rules, requirements. What's interesting about what we do versus M&A or other types of transactional practices, part of why I like it, is that you have to be, I use this word, like sort of the wizard of everything related to a private equity fund. You can't just be good at the transactional part. You have to understand the regulatory part. You also have to understand economics of how you split money up the chain to your employees of a private equity fund or a hedge fund. You also have to understand financing, because a lot of these funds are going out and getting credit facilities from third-party banks. You also have to understand tax, because tax structuring is half of what we do when we set up funds. You also have to understand M&A, because they're oftentimes assisting a lot of the structuring or negotiation of the transaction to buy the assets, the companies, the real estate that the fund ends up bringing into the fund structure. And so you have to know a little bit about everything. It doesn't mean you have to be, the 10 out of 10 expert in every single field, but you have to know enough to know when to be able to at least parry, with your clients, and also bring in specialist counsel when you're dealing with those issues, or trying to market in Europe and needing your London colleagues to do that piece as well. So, long way of saying, like, regulatory is a big part of what we do, but it sort of sits in the background constantly. And I'd say about 20% of my day, I'm thinking in some way about regulatory, even though I'm not really a regulatory lawyer per se.
Great. And just a reminder to everyone, please use the Q&A if you have any questions. And all the links are in the chat for our prize raffle, and also to sign up for the different firms, our recruiting lists and other resources. So make sure you look at that. Rami, you just mentioned some really interesting points about working with other groups and how private funds is intertwined with other areas. So I want to stick with that. I guess Rami and Meg, tell us a little bit more about what are some examples of that in your practice, of how you work with colleagues in other groups, whether that's M&A, tax, or other areas when it comes to acquisitions, investments, fund formation. Curious to hear more about that.
Yeah, sure, absolutely. We, as Rami said, we do work a lot with the other groups, because our clients will be needing all of those services as well. So financing, for example, we work with our finance team often on a capital commitment line, which is basically a loan that would be made to the partnership, the fund, to add to the investments and used for various different purposes. But we need the work with the finance team, and also but understand what would be involved in the loan terms to add to our partnership agreement, and then work with them on the details. So again, you do need to be a little bit of a jack of all trades. Oftentimes we have funds with certain strategies. I know, for example, we have a couple funds that really focus on LLCs, flow through partnerships. They're looking for a better taxable situation for family office taxable investors. And for that reason, they really like to structure through an LLC. But because of other restraints with our fund, we need to work closely on the tax structuring for each deal. So whether Winston and Strawn is doing the deal or working with another firm, we'll work really closely with the M&A or private equity team on the structuring for each deal. And then we really like tax comes into play, all the time. That's kind of overall, you start with tax and then you do everything else. But we also have employee benefits issues because Arista plans might be investing. So you really find ways to work really with a lot of different groups. From time to time, and I don't want to scare Ryan here, litigation, because there'll be a lawsuit that affects either the fund or one of the portfolio companies, more often at the portfolio company level than the fund, knock on wood. But it does happen, and then we work with the litigation team. So it's definitely an area where you work closely with other parts of the firm, and it's great to be at a firm where you have all of those practice areas.
And I guess to piggyback on I think you were asking primarily about M&A and other practice areas. I guess to give you an example, like we are working now on a single asset fund where we're pooling investor money to go into an underlying company that's pre-IPO and probably one that everyone would know. They are offering, or they're letting their employees participate in an employee tender round where the employees who have now equity that's worth a lot, or early institutional investors that got in early and now want to cash out, are able to essentially, in a private transaction negotiated, sell to buyers, including our fund. So we work closely with our M&A team, who is working on sort of that piece of the transaction and also helping us describe that transaction in our marketing materials to investors. Because we understand the basics, but they're sort of the actual sort of in the weeds experts about how the M&A piece works. So we set up the fund vehicle, but we're also working alongside the M&A team who's negotiating sort of the actual purchase in this case. That's one example. It's pretty straightforward and relatively typical. Another thing that we have at Frey, which is sort of interesting that I didn't do prior to coming here, but I think it's sort of fascinating, is a sort of robust seed and stake practice with that, or stakes practice. And what that means for the 1Ls is our fund will make both in a large investment in a relatively newer sponsor that essentially is trying to get off the ground and looking for a large institutional investor to give it some credibility. But also in connection with that, we'll make an investment in the sponsor itself. And so they're actually buying in an M&A transaction a piece of the private equity fund. So they'll get a piece of the profits, they'll get a piece of the management piece in some cases. And so that's why we call it seed and stake. They're seeding the fund in terms of letting it get off the ground by being a primary initial investor, but they're also getting a stake in the fund. So in this case, our fund and the investors upstream in our fund are getting profits both from making an investment in the private equity fund, but also being a part owner of the private equity fund up top. And so there's obviously a lot of conflicts and interesting other tax issues related to that. But that's sort of an interesting practice area that allows you to play both M&A lawyer a bit and funds lawyer. And there's a ton of other practice areas we work with, like I mentioned, tax and finance and European colleagues for all the European marketing rules and everything, employment, because you also oftentimes do deal with employment issues up top for private equity employees. So again, like I tried M&A for a long time and I just found it very linear and one-dimensional. And even though it's a lucrative area, I know a lot of people want to do it, I sort of liken it to, and I'm a family-old doctor, so this is the way I analogize it. They're like the surgeons. They go in, they cut, they operate, they walk away. They don't really care what happens 10 minutes or 10 years later. Like they're done. They might have left a scalpel in you. They don't really care. That's for someone else to figure out litigation. We are not that. We are like Dr. House. I don't know if you guys have still watched that show or anyone watches that show. Like we have to know a little bit about everything, and we have to understand how the whole system operates and interconnects. And I just find that super interesting. Like that's why I was drawn to this as a sort of systems thinker versus M&A world.
Hopefully no surgeons. Hopefully no surgeons watching this session.
Surgeons, but
one day we'll have a practice area session duel, and then and when two practice areas, they could duke it out of who's better. No, that's helpful insight. So Ryan, moving to kind of the law student experience and thinking about transactional work. So for a student on a session like this, interested in transactional work, can't decide between fund formation, some of the other practices that Rami mentioned, M&A, finance, capital markets, other areas. What is the best way, from your perspective, for a student to learn more and decide what's for them?
Yeah, it's a good question, and it's okay to feel like you don't know right now. I think is the first thing I want to say to you is like totally fine. And second of all, you're doing the right thing right now by coming to things like this. And not that you're going to hear everything you need to know, but little samples of stuff from different people are going to give you a window into what the practice is like, what is the job like, what is the lifestyle like, because there are big differences between the sorts of transactional practices that our firms have and that even that we work with on a day-to-day basis. I would say read as much as you can about the different, not only the law, but the industries and how they work and what's fascinating to you, because if it doesn't interest you, you're not going to want to do it for a long time. It'll just feel like a grind. You have to feel inspired by and interested in what your clients do. I think, if solving problems, helping them achieve goals, if that motivates you, find goals that to you, like sort of speak to you, I would say is a good way to approach it. I would say find a summer associate program that lets you sample different corporate practices is really important. We do that at Proskauer. I'm sure the other firms here today do the same thing. We spend a lot of time, we cycle you through funds, M&A, private credit. There's opportunity to sample a little bit of everything and learn in depth. It's more about learning than doing work, to be perfectly honest with you, and getting to know the people. And that's your opportunity. Ask a ton of questions, shadow lawyers, not to be shy, network, spend time with people, find out what their lives are like. The only other thing I'd say is try to get a sense for what the lifestyle for that practice is. They're all a little bit different, right? Like another distinction between an M&A lawyer and, to keep picking on M&A lawyers, and funds lawyers, is like M&A deal cadence is very choppy, right? Like a deal comes in and that might have to close in 2 weeks or something insane like that. And you're going to work really hard over like a short burst. Funds don't usually happen like that. I mean, we have things that happen on a short time frame, but you're not going to raise a $2 billion private equity fund in 2 weeks. It's just not going to happen. You're going to have to, it's unlikely to happen, right? So you're going to have to, there's a lot of project management. There's a lot of counseling along the way. There's a lot of planning. There's a lot of, it's a 6-month project. Sometimes it's a 12-month project. It depends on who you're dealing with, what their goals are, and how in demand they are, frankly. But it's, get a feel for what you like. I mean, do you want like that kind of constant, you like a longer project with a sort of constant, sort of steady progress approach? Do you like the thrill of like having a deal come in and needing to close it in a week? We all know both types of people, and it's a little bit about finding out what motivates you and which type of person you are.
That's great advice. So I guess sticking in the same vein, as we mentioned before, the 1L curriculum is very litigation focused. So transactional practices like fund formation don't get a lot of attention. I guess what can a 1L do in school? This is always an interesting question that we ask on these sessions. I guess any courses that you recommend to learn more about fund formation practice, and any resources that law students can use just to stay updated on the industry, specific maybe blogs or periodicals and different things like that would be helpful for students to stay updated. And that's for anyone to chime in. I'm curious to hear more about that.
I can start with that one. First class I would put on the list is tax. It's a lot about, not the details of the tax code, but just the general policy behind it, why we pay taxes. This will help you decide to be a litigator in the end. Everybody pays taxes. I found that extremely useful just as a base for going into any type of corporate law because tax is fundamental. I also think like securities law, security regulation is helpful. A lot of time that's looking at it from a litigation perspective and a corporate perspective, but the fundamentals behind why the securities laws are the way they are helps you to understand how things, might happen or what the SEC might think about a particular situation. So having that background in securities laws would be really useful. I found those two classes to be very helpful going into a transactional practice out of law school. And also you start, reading. There's so much online now you can look at in terms of what's going on in the market. But I'd start with the Wall Street Journal. Everybody in private equity and business, quite frankly, is going to be reading the Wall Street Journal. So start seeing what's out there, what interests you, what types of companies interest you or draw you in would be my recommendation on that.
I would echo those. I think those are all great. I got a tax certificate. I'm not a tax lawyer. I got a tax certificate in law school. I think just having that fundamental basics to helps you issue spot and understand how all that works. Taxes touches everything. I would say corporate finance, if your school offers it, is a great class, even if you're not going to be sort of a traditional finance lawyer, just understanding the way capital structures work. How do businesses finance themselves? What's equity versus debt versus like how to read a balance sheet, basic kind of accounting is going to give you sort of a fundamental view on like how the financing of businesses work, which is just really going to be important regardless of what sort of corporate transactional route you go. I think that would be a fundamental sort of basic thing that could help you regardless of the direction you go. And I would also echo like Wall Street Journal, really any sort of industry publication that focuses on whatever it is you're interested in practicing in. I think when you come to a law firm, we don't expect you to know private equity law, right? We'll teach you that. What we hope is that you understand the business a little bit and kind of understand the basics about what your future clients' businesses are, what they're trying to do, speak their language a little bit. Even if you don't know that, we'll teach you it. But if you want to impress people on day one, I would say that's a good place to start.
Yeah, I think part of it is also maybe asking yourself as you go through law school process. I don't think I did a good job of this, frankly, but what kind of things you find interesting. And so, like, I actually asked this of our summers. They come in and they try everything, and I always ask them like, "Hey, did you like civil procedure? If no, you might be interested in what I do. If yes, I had no idea how you like that class." Because we tend to find that certain things are indicative of a certain type of interest. Like, for example, I tend to find that someone I'm talking to just right away is like a systems design thinker or systems thinker and likes complexity and systems and puzzles. And like that to me right away, when I'm interviewing someone or talking to them, I'm like, this person probably will like what we do on some level. They may not like it in every aspect of it, but they're primed to find it interesting versus somebody who, enjoys reading like a 10K over and over again, which I would have lasted about 2 years doing that. So it's just a different type of personality. They're all fine personalities to have, but I think they do indicate an interest in different types of practices. I mean, I kind of took a different approach in law school where I took some of the fundamentals, but I also just took things I found interesting, like climate change law and biblical law and foreign policy stuff. I was like, well, I'll learn the other stuff later when it comes down to it. That's generally how it works. Like, it does help to have tax and securities laws, but I don't know how much I actually remember that was relevant to the practice of law. Like, most of it you just end up learning on the job in any event, and you're never going to get back to school probably again. So if there are classes you really like, or professors, frankly, that are really great, irrespective of what they teach, just like I would say, take those people and you'll figure it out. Like all this stuff, you have the rest of your life to do this.
That's great advice. So I know we're almost out of time, but this is an interesting question. I do want to make sure we cover it before we move on to our last question. So what are some, I guess briefly, what are some common exit opportunities for fund formation attorneys? And to those students who are listening, what that refers to is, obviously when you join a firm, your goal might be to stay at that firm forever. That firm might have the same goal when they hire you as a student, incoming associate, but of course that's not always the case. And oftentimes joining a firm is just the first step to a long and successful career doing something else. What are some of the exit opportunities? What do fund formation attorneys go on to do when, let's say, when they leave the law firm? Curious to hear about that briefly before we wrap up.
I can jump in there. Oh, sorry. Sure.
Go ahead.
So there's in-house positions at private equity firms or even at larger institutions, financial institutions that have a private equity platform. Those are some places where we see, mid-level associates that are interested in working in an in-house situation would go. So that's one of the main opportunities if the big law firm isn't where you want to stay. Great place to get training, definitely where you want to start. And well, I guess you can start at a hedge fund and then go back as well. That's the good training, but usually people go the other way and they get some basic training and then go work at a private equity fund or a hedge fund.
Yeah, you could also do, if you're interested in government, SEC is an obvious place. If you're interested in the regulatory side, government generally is a place people in DC especially tend to gravitate to. They go in and out sometimes. As Meg said, like private equity, hedge fund, venture capital funds, at our level, we get inbounds a lot for like, oh, GC of some random whatever private equity fund. Sometimes they're interesting, sometimes less so. Mid-level is typically are assistant GCs or whatever equivalent there is somewhere else. Usually usually pretty lean shops. Except for the largest PE firms, you tend to find like hedge funds have like half a lawyer oftentimes. It's just they're too small to justify sort of the cost. Private equity funds tend to have a little more in legal. The larger banks we work with have decent legal departments, although still relatively lean. I also have had friends go into academia, become professors. People just go into business generally. One thing that's nice about what we do is that we are transactional, but we're also really operationally focused. Because we are helping run and advise private equity funds, we are essentially understanding how a business happens to work inside and out. And so while that's specifically attributable to private equity or hedge funds, it's actually a great skill for any sort of company that operates in the United States or elsewhere, because you understand how a variety of pieces fit together within a platform. And so I would think if you're a good salesperson, you could probably get a job in some sort of operations role, senior role at more or less any small privately held company. But you can do a lot with this background. It's a pretty broad brush set of skills that you learn.
Yeah, I think that's an important point that the JD as a degree and also the experience at a law firm could set you up not only for a legal role outside of a law firm, but also a business side role, which is sometimes very interesting. Great. Well, this was super interesting. We're going to move on to our last question. I guess now is a chance to plug the firm. So I guess and we'll also give out some fun prizes. So in 30 seconds or less, why should someone choose your firm? Those who have been on our sessions over the last few weeks know our rule here at Summer Associate Hub. You can't say it's the people. Because as a 1L and you go through the process interviewing and networking, you'll notice that somehow, some way, at every firm, it's the people. So here on these panel discussions, we try to have a different answer. So I guess Ryan, let's start with you. 30 seconds or less. Why should a student choose Proskauer?
Our funds group is, I think, notable for its size and breadth. And breadth, I would say, because we cover the full spectrum of both asset classes, from small venture to growth to buyout to credit to fund of funds, and managers of all sizes, from sort of seed level VCs to large buyout funds. So we see different things all the time, all different considerations, all different positions, and so every day is a little bit different, and it keeps things interesting.
Great. Thanks for that, Ryan. We have a Proskauer swag gift. Seth Wynn, if you're with us, please let us know in the Q&A. Seth Wynn. All right. So just a quick reminder before we keep going. There's a document that I posted in the chat that has all the links to the Zoom breakout rooms. So make sure you have those so that you could join the different breakout rooms for the firms that the firms will be hosting right after this discussion. All right, Rami, on to you. 30 seconds or less. Why should a student choose Free Frank?
The same reasons that I chose Free Frank. I mean, I'm a lateral partner, so I spent my career at two prior firms. One, a very large firm with a decent sized fund practice. The other, a mid-market shop that we helped build out for funds. I came over because there's 150 lawyers. We're band one practice. We do some of the best deals out there. And my colleagues I work with are some of the most rigorous and thoughtful lawyers I've come across in the fund space. So, for those who are interested in like a niche private equity fund focused firm that is, a super rigorous shop in terms of intellectual breadth, the depth, I think we're about as good as it gets.
Great. Thanks for that. And Free Frank sponsored a Free Frank branded outdoor blanket. It's a good gift. Alyssa Capasi, if you're with us, let us know in the chat, in the Q&A, and we'll get that coordinated. All right, here, that was quick. All right, Meg, on to you to finish us off. Tell us 30 seconds or less, why should a student choose Winston and Strawn?
Sure. Couple reasons. One, our first and second years rotate through the transactions department, so it's a very good place for people that are looking to try private equity, try fund formation, try a few different areas before they commit to it. And our funds practice does focus on the middle market. Our kind of sweet spot for fund sizes is anywhere from 500 million to 2 billion, whereas some shops are doing much bigger in a range. But because of that, we'll have smaller teams because of the kind of cost pressure on that. And junior associates get a lot of client contact from day one. So we even have our first years on client calls and interacting directly with clients. And some people don't like that, but some people really do. And we do it obviously with careful supervision, and we're available to answer questions. But having that early client contact, I think, can be really instrumental to development of junior associates.
Fantastic. Thanks, Meg. And the winner of our Winston sponsored firm Yeti mug is Kelsey Liu. So Kelsey, if you're with us, please let us know in the Q&A. Well, this was a really interesting discussion. I personally learned a lot about fund formation practice, and I'm really glad that we had this group. So thanks everybody for joining. Just a reminder, our breakout rooms are going to be starting now. All the links are posted in the chat as well as a Word document. So make sure to save that so you could join the different Zoom rooms. One thing I always like to mention is to our students who will be joining the breakout rooms, don't squat. Use the opportunity to hear from different firms, different perspectives. Jump around, especially as attorneys are taking time out of and recruiting team members taking time out of their evening to join us. So please join us there, ask questions, learn more about the firms and the different practices. And thanks again for this wonderful discussion. Thank you all for joining.
Thank you.
Thanks, everyone.